Donor's tax. Donation is an act of liberality whereby a person, donor, disposes gratuitously of a thing or right in favor of another, donee, who accepts it. Article 725 Civil Code. Donor's tax is an excise tax imposed on the privilege of transferring property by way of a gift inter vivos, based on pure act of liberality without any or less than adequate consideration and without any legal compulsion to give. Note, the donor's tax shall not apply unless and until there is a completed gift. The transfer of property by gift is perfected from the moment the donor knows of the acceptance by the donee. It is completed by the delivery, either actually or constructively, of the donated property to the donee. A transfer becomes complete and taxable only when the donor has divested himself of all beneficial interest in the property transferred and has no power to recover any such interest in himself or his estate. Transfers which may be constituted as donation. 1. Sale or exchange or transfer of property for insufficient consideration. 2. Condonation or remission of debt. Rule regarding condonation or remission of debt. If the creditor condones the indebtedness of the debtor, the following rules apply. 1. On account of debtor's services to the creditor, the same is in taxable income to the debtor. 2. If no services were rendered, but the creditor simply condones the debt, it is taxable gift and not a taxable income. Rule regarding transfer for less than adequate and full consideration. General rule: where property is transferred for less than adequate and full consideration in money or money's worth, the amount by which the FMV exceeds the consideration shall be deemed a gift and be included in computing the amount of gifts made during the calendar year. It is as if the property was donated, but in order to avoid paying donor's tax, the donor opted to transfer the property for inadequate consideration. Exception: where the sale, exchange, or transfer is made in the ordinary course of business, which is bona fide, made at arm's length, free from any donative intent. Where property transferred is real property located in the Philippines, considered as capital asset, the transfer is not subject to donor's tax, but to a capital gains tax, which is a final income tax of 6% of the fair market value or gross selling price, whichever is higher. And therefore, there can be no instance where the seller can avoid any tax by selling his capital assets below its fair market value or FMV. Note: arm's length transactions are described as those dealings wherein both parties are independent of each other, has no relationship with the other dealing party. They are acting in their own self-interest. Determination of gross receipt. Gross gift: all property, real or personal, tangible or intangible, that was given by the donor to the donee by way of gift without the benefit of any deduction. Section 104 NIRC. Net gift: the net economic benefit from the transfer that accrues to the donee. Note: if a mortgage property is transferred as a gift, but imposing upon the donee the obligation to pay the mortgage liability, then the net gift is measured by deducting from the fair market value of the property the amount of mortgage assumed. Composition of gross gift. Donor: RC, NC, and RA. Resident citizen, non-resident citizen, and resident alien. Gross gift: all real properties, tangible and intangible personal properties, wherever located. Non-resident alien: all real properties, tangible and intangible properties located in the Philippines, unless the reciprocity applies. Donor's taxation. Donor's tax rate before trade. Donation to relatives subject to graduated donor's tax rates from 2% to 15%. Net taxable gift below 100,000 are exempt. Donations to strangers subject to a flat rate of 30% of the net gift. After train, a flat rate of 6% is imposed computed on the basis of the total gifts in excess of 250,000 exempt gift. Distinction between donations to relatives and to strangers is removed. Transfer for less than adequate in full consideration, Section 100, before train, where property other than real property subject to CGT is transferred for less than an adequate and full consideration in money or money's worth, then the amount by which the fair market value of the property exceed the value of the consideration shall, for the purpose of the tax imposed by this chapter, be deemed a gift and shall be included in computing the amount of gifts made during the calendar year. After train, additional provision, a sale or exchange or other transfer of property made in the ordinary course of business, a transaction which is a bona fide, at arm's length, and free from any donative intent, will be considered as made for an adequate and full consideration in money of money's worth. Exemption of certain gifts, Section 101, before train, dowries or gifts made on account of marriage and before its celebration or within 1 year thereafter by parents to each of their legitimate recognized natural or adopted children to the extent of the first 10,000 are exempt. After train, exemption of dowry has been removed. Estate taxation, state tax rate before train, subject to graduated estate tax rate from 5% to 20%. Net taxable estate below 200,000 pesos are exempt. After train, a flat rate of 6% is imposed regardless of the value of the estate. Computation of net estate. Before train, funeral expenses, judicial expenses, and medical expenses are deductible subject to certain requisites. Standard deduction of 1 million is allowed for resident or citizen dissident. No standard deduction is allowed for non-resident alien dissident. After train, funeral expenses, judicial expenses, and medical expenses are no longer deductible. Standard deduction of 5 million is allowed for resident or citizen dissident. Standard deduction of 500,000 is allowed for non-resident alien dissident. Family home deduction may not exceed 10 million. Notice of death before train. Where the gross value of the estate exceeds 20,000, the executor, administrator, or any of the legal heirs, as the case may be, within 2 months after the decedent's death, or within a light period after qualifying as such executor or administrator, shall give a written notice thereof to the CIR. After train, repealed. Notice of death no longer required under train law. Deadline of state tax returns. Before train, the estate tax return shall be filed within 6 months from the decedent's death. After train, the estate tax return shall be filed within 1 year from the decedent's death. Filing of estate tax returns. Before train, where the gross value of the estate exceeds 200,000, whether liable to pay state tax or not, or regardless of the gross value of the estate, where the said estate consists of registered or registrable property such as real property, motor vehicle, shares of stock, or other similar property for which a clearance from the BIR is required as a condition precedent for the transfer of ownership thereof in the name of the transferee, the executor or the administrator or any of the legal heirs, as the case may be, shall file a return under oath in duplicate. After train, in all cases of transfer subject to estate tax, or regardless of the gross value of the estate, where the said estate consists of registered or registrable property, such as real property, motor vehicle, shares of stock, or other similar property for which a clearance from the BIR is required as a condition precedent for the transfer of ownership thereof in the name of the transferee, the executor or the administrator, or any of the legal heirs, as the case may be, shall file a return under oath in duplicate. CPA certification before train required if gross estate exceeds 2 million. After train required if gross estate exceeds 5 million. Payment of tax antecedent to the transfer of shares, bonds, or rights. Before train, if a bank has knowledge of the death of a person who maintained a bank deposit account alone or jointly with another, it shall not allow any withdrawal from the said deposit account unless the CIR has certified that estate taxes have been paid. The administrator of the estate or any one of the heirs of the decedent may, upon authorization by the CIR, withdraw an amount not exceeding 20,000 without the said certification. After train, if a bank has knowledge of the death of a person who maintained a bank deposit account alone or jointly with another, it shall allow any withdrawal from the said deposit account, subject to a final withholding tax of 6%. There is no more limit as to the amount of withdrawal that may be made.